The number one misconception is just people that see you can buy a business with no money, especially on the SBA side. Technically, you can do it, right? I mean, if you found a lender who wanted to do it, you can do it, right? You can raise investments, you can get seller financing, you can get an SBA loan for up to 90%. But I can assure you, there's no lender that is doing that and allowing that. Everyone wants some skin in the game. And if a lender does come out and decide they want to do crazy stuff, that's probably not going to last too long in our industry.
What other mistakes do you see first-time buyers make with their SBA loan applications that can facilitate a rejection?
These SBA loans are not cookie cutter at all. That's actually the biggest misconception is go get an SBA loan almost like it's a home mortgage and it's like the same everywhere. It could not be more different. I mean, the SBA program is really just an insurance product that banks get to go design their own small business lending programs with. And they could do it if you ask 10 SBA lenders a question, you might get 10 different answers.
What you do not know about SBA finance for acquiring an online business can either hurt you or at the very least hold you back. Hi, I'm Jaryd Krause. I'm the host of the Buying Online Businesses podcast. And today I'm speaking with Ray Drew. He is the SBA Managing Director at Truliant Federal Credit Union, where he helps entrepreneurs buy businesses through SBA financing. Now, with over a decade in the industry, Ray has closed hundreds of deals and is widely regarded as one of the leading voices in the SBA lending industry today. He's also the host of the number one podcast in the SBA lending industry, the Art of SBA Lending. And in this podcast episode, I guess you can guess what we speak about. We talk about where first-time buyers get caught up with SBA, what they actually don't know, some big misconceptions in SBA, in terms of rates, terms, balloon payments, finance, like seller financing, seller notes. We also talk about deal structures, common deal structures, the SBA loan process and how long it can take, what can get in the way, what can prevent a business from being acquired using SBA or a person, or what a lender would prevent using SBA. Why it's critical to have a good M&A attorney and advisors on your team that can help you get these things across the line. And we talk about, how much can you get with SBA and what you can do with it. And the biggest thing is the misconceptions where people think you can get SBA lending for certain types of businesses or certain types of structures and think it's the norm, and why it's actually not. And what you need to know if you're looking at acquiring an online business with SBA. This is such a valuable podcast. Also, because we're talking about businesses, if you haven't got my due diligence framework, it's free. It takes the guesswork out of buying businesses. It's saved people millions of dollars. It's made people millions of dollars. There'll be a link to that in the show notes. Check it out, download it, and also check out Ray's SBA podcast as well. Enjoy the pod. Ray, welcome to the pod. Thanks for your time.
Hey, thanks for having me on. Appreciate it.
Absolutely. So the Art of SBA, that's your business. Why did you decide to make your business around SBA loans? Tell me more about that. And how did you get into it?
Well, I fell into SBA pretty much out of college. So going back to 2011, took a marketing internship. It kind of parlayed into a sales role, and I was just kind of pounding the phones, not really knowing quite what I was selling. But it turns out it was SBA financing. So I've been doing this for 15 years. And along the way, I started, kind of getting into content, and because I was in a business development role most of my career. So I just came from a content marketing mindset, probably a little bit before it was very popular in our industry. So I started with an email newsletter, and then that kind of turned into LinkedIn content, which turned into this podcast, which is actually for other SBA lenders to listen to. As I was leveling up in my career, I wanted to help others within our industry level up as well. And then, been doing this podcast for the last 6 years to kind of help the SBA industry evolve and sort of push forward. So that's kind of my story.
That's cool. So this is for banks and other lenders to understand more about SBA and how to use them themselves, right? Because
Yeah, I mean, my day job is an SBA lender. We have an SBA lending program at a credit union called Truliant, and we're the number one credit union in 7A lending. We're top 10 in the country for business acquisition, SBA loans. And then, by night, I do podcasts and content. So I've got, for our audience, it's probably what's more relevant is my SBA Ray YouTube channel. So that's a very credible source of information for any entrepreneur interested in SBA financing. We've been building that up since I think last 3 years or so. And it's a lot of really strong educational videos because I was looking on YouTube and I was seeing people put out a lot of stuff. And this was during like PPP. Everyone was kind of getting into it. PPP was like the COVID relief loans and stuff. Everyone's probably heard of them by now. But yeah, the stuff that people were putting on the internet was just crazy. I mean, absolutely crazy. And it's, it's the same stuff all around with the ETA space and whatnot. I mean, everything was kind of going online during this pandemic, like podcasting, Twitter at the time. And yeah, I was like, I can't let this go on. I mean, this stuff's wrong, even if it's not fully wrong. I was like, I got to go out there and be a credible voice on the internet. So that's kind of how I got into it.
Yeah, thank you. I same with my industry here is there was people looking at buying businesses and they're just were terrible businesses. And I'm like, I can't let these guys buy a lemon. Like I need to like prevent that.
Yeah.
And people having these assumptions now on how SBA or lending works with acquisitions. Let's start there. Like, what are some of the things that you found on the internet or have seen people talk about on the web around acquisition, like using SBA for an acquisition that is just false or misleading that, holds people back?
Well, the first thing that comes to mind is, and by the way, it is a great opportunity. I mean, it really is. I mean, when you're buying a business at this type of multiple, which might be 3 or 4 times the seller's discretionary earnings. I mean, compare that to what's going on in the stock market. It's like, there's actual value here, but you can't understate the operational risks that are involved in a small business. So there's some great upside. There are some risks, but the number one misconception is, just people that see you can buy a business with no money. Especially in the SBA side. I mean, on the SBA side, technically, you can do it, right? I mean, if you found a lender who wanted to do it, you can do it, right? You can raise investments, you can get seller financing, you can get an SBA loan for up to 90%. But I can assure you, there's no lender that is doing that and allowing that. Everyone wants some skin in the game. And if a lender does come out and decide they want to, do crazy stuff, that's probably not going to last too long in our industry. Our industry got a little frothy during, this was the whole thing, ETA, business acquisitions, SBA lending, during 2021 was kind of like the height. This was in the era of free money. And I think everyone drank a little bit too much Kool-Aid, and we're kind of coming off of that right now.
Yeah, we definitely are. In our space, everybody alludes it to being the aggregator space where people was buying Amazon FBA businesses for crazy multiples with a lot of finance. And it's just because one person says it can be done doesn't mean it's the norm. And I'm glad that you said like no lenders are doing a no money down deal. For years, myself and some other content creators have been sharing is like, yes, it has been done, a no money down deal, but it's likely never, like you're not going to get there. Like
there's 2 instances where I actually do support it. One would be, hey, I'm the longtime operator of a business and I'm buying it from my boss, the owner. And I've been a W-2 employee for the past 10 years here building this thing. And I don't have a chunk of cash sitting on the sidelines, but I've got sweat equity. I've got, I've kind of put my blood, sweat, and tears into this business. And I know it better than anyone else. So as a lender, I'm saying, I would take that bet. If you can scrape together 5% through investments or gifts, and the seller hooks you up with 5% on a standby seller note, and I'll do 90. I'll do that all day long. The other example is if you're already in business and you want to buy a similar business or, an exact business, a competitor, situations like that where you've already proven yourself, you have a business that you've owned for a few years and there's equity on the balance sheet, you can leverage that into other deals. And I think that those are another example of where you can get into a business with no money down.
Yeah. Basically, you're talking about how a lender can see a decreased risk because operations are pretty tight and you've got confidence in the operational staff, right?
Right.
What other sort of misconceptions, like the no money down deals is a massive one, but what other sort of misconceptions do you see that people are throwing out there as just massive hype and not really a reality for acquisitions using SBA?
I don't know. I mean, the hot button issues that I hear about are, of course, SBA loans involve a personal guarantee. I do find that to be an issue with a lot of people that stumble across the space and kind of come from a more cushy, situation, corporate America, things like that, where, this is like a knife fight over here in, SMB land, and, you're all in. So if you don't think you're all in, you are. It's personal guarantees and you're pledging all available collateral. So if you own real estate with equity in it, the SBA is requiring us to put liens on those properties. So a lot of people might have a house, maybe an investment property, maybe a whole portfolio of real estate. All that stuff's getting thrown at this thing. So, you really have to believe in what you're doing for this to make sense. The other thing is, interest rates have been a big topic over the years. I mean, the 15 years I've been doing this, I mean, we were essentially 0% interest rates for at least half of my career, including during COVID for a couple years. And basically what that means is SBA rates were at 4.5% to 6% for a while. And these are and they're adjustable rates. So what we did was we made a bunch of loans in 2020, 2021, 2022. Rates shot up 525 basis points, which is fancy talk for 5.25%. So everyone and the SBA allowed us to charge an extra 0.25%. So essentially the rates went from a maximum of 6% to 11.5%, putting tremendous stress on everybody because your rates adjusted. Every quarter they adjust for most SBA loans, not all, but most. And so now we're seeing the backside of that, which is nice. They just cut rates. They might cut them again by the time this comes down, but maximum SBA rate right now is 10.25%. We're doing rates in single digits, of course, now, which is great. And hopefully that continues to come down.
I'm not an economist, but based on the economy, we could pretty much see that that's a likelihood. You can't hold me to it, but like rates are coming down all over the world. I think Australia paused, but I digress. I want to get to when you're talking about the rates adjusted every quarter. Can you just share more about that for people that are looking at getting SBA for an acquisition so they understand like why that's a thing and how that works?
SBA rates are tied to the Wall Street Journal Prime Index. So the SBA lender charges a margin over Prime. So today, if Prime is 7.25%, which I think it is, it's hard to keep track these days, but yeah, that's right. So the SBA lender can charge up to 3% on top of that, which would get you to 10.25%. Now, the majority of these loans are quarterly adjustable. That is because there's a robust secondary market for SBA lenders to sell into. And that's kind of what, how this industry cycles. So when you have an SBA loan and you close on your SBA loan, your rate's, let's say 9%. Well, if the Fed moves the rates up or down that following quarter, your rate moves up and down and your payment could reamortize and your payment could increase or decrease depending on how often the lender reamortizes the payment. But essentially, yeah, you've got a moving target on your payment, which right now is good because the rates are coming down. But obviously, it could be bad if the rates go up. So that's just how most SBA loans work.
Yeah. There's no fixed rate like you
There
can.
are, but they're very rare. I mean, the big banks usually will do them, like Wells Fargo, Chase, things like that. It's just a lot of these banks are more conservative. A lot of them like collateral. I mean, most of the banks that are in my space of, hey, $1 to $6 million business acquisitions with minimal hard assets as collateral and only 10% equity. I mean, the vast majority of those are adjustable rates. I mean, that's just the market.
Yeah. Have you seen an e-commerce or an online business ever have an SBA loan with a fixed rate with one of those larger lenders? I couldn't foresee that being a thing, being like the distribution channel, the sales distribution channel being mostly online without any assets, I would say.
Yeah.
Like hard assets.
So I don't want to speak for those lenders, but I will say this, and e-commerce has been one of the top industries I've personally lent to, probably one of the top 4. And going back to, 5 years, it was unheard of to finance these deals. People didn't even, and it's the people, who actually make the decisions at SBA lending departments who tend to be older. It's hard for them to fathom doing a deal for a business that doesn't have a physical location. At the time, it was completely unheard of. I mean, everyone had a physical location. And this was only going back 5 years ago. And I mean, as you know, e-commerce, they might be operating with a 3PL. They might not even have their own warehouse. They might be, in the Amazon FBA. And it's just those deals, those lending programs, accepting those types of deals really just started coming online within the last few deals and becoming more commonplace. But yeah, you still see a ton of pushback on those for a myriad of reasons.
Yeah. I mean, single source dependency on Amazon, taking one of your listing, your prize product listing down. I mean, it makes sense from a lender's perspective. And that's what I urge acquirers to understand is the lender's perspective on how much they will finance and what sort of conditions under as well or not.
I will say I do a lot of them, and they're actually they're not terrible. I mean, I saw one the other day, and there are some problems you do run into with these. Like I saw one the other day where it was completely tied to the owner's personal brand. Like you go on their website and it's like the owner's face, and it's like maybe they're a doctor and they're selling a supplement, and then the buyer is like, a Google engineer that it's just like because there's a lot of one of the big stipulations with SBA is like the seller has to exit the business. They can't remain an employee of the business. They can basically stay on for up to 12 months to help transition the business. Those types of deals and others were good candidates for the basically a equity role, which in our world we call a partial change of ownership. The SBA didn't allow that for decades, but then in 2023 they started allowing it, and for reasons I can't really explain, they really screwed it up in this past year and changed the rules again to essentially say if the seller is going to retain even 1%, then they have to personally guarantee the buyer's loan, which of course is a really big ask that doesn't make sense. And they've got to do it for at least 2 years, essentially. So it makes those types of scenarios really tough, but I like getting into it. I like the inventory component, the online marketing component, and dialing into basically looking at those deals from as a lender, looking at them like a buyer would look at them. I mean, once you kind of get into the industry and you understand a little bit more, you kind of know what questions to ask, and that helps make sense of a deal. I mean, I just issued a term sheet on one this past week that took a little bit of work to get to because you're seeing a big drop in revenue in some of these companies. And we saw a big drop, about 30% year over year from, 3 years of stability. And then you see a drop, and you've got to ask yourself, what's causing that drop? And is it continuing to drop? And that deal scared away a lot of lenders because on the surface, of course, that's, scary. But I was able to peel back a few layers of the onion to kind of get comfortable with it.
Was this a blog by any chance? I don't know if because I've noticed something similar in the last 2 weeks. Might have been maybe a month ago.
No, what's going on with the blogs?
Yeah, there was a blog that it was pre-approved for SBA acquisition, and we were in the running, maybe in the top for like a bunch of other possible buyers, and it's just the owner had slowed down work on it and due to health reasons, and it dropped, and we went to LOI, and then we started getting a bit more information, and after we even signed LOI, and there was full transparency from everybody, especially on the selling side as well, that the traffic had dropped and the revenue had dropped, and we saw that reflective in the numbers when we were about to start DD. And yeah, we walked away. But I just don't know how SBA would have viewed that. It was a significant drop. It was a little bit more than 30%. And for something without, inventory, and it's just making money from mainly one source.
Well, the way, I mean, it's probably similar to how a buyer would look at it. I mean, first of all, when we look at a deal, the part that is a little different is we're looking at tax returns, and we're looking at 3 years of tax returns. So we're focused on really the 2024 tax return that's the most recent year. Like that's where most of our emphasis is coming in. And then we'll look at the current year to date and just make sure that's kind of continued or gotten better, but not worse, which happens. And then you've got to kind of go to plan B. But, a lot of buyers are looking at maybe more of like a trailing 12. What did it do last month? Sometimes I'll see in a sim like last month it did X, and it's like, I'm looking at years, and we're lending 10 years into the future. So that's the first thing. Now, when we're seeing some sort of drop in, recent numbers, I mean, first you want to ask why, of course, and kind of understand that. The supply chain issue, or supply chain / tariffs has been it's been crushing to a lot of these businesses in recent, time here. But I'll drill into a trailing 12 and kind of look month over month and see if this trend has sort of bottomed out or if it continues to decline. And then it's all about structure. You might want a larger seller note to offset it. And also you want to just make sure you're valuing the business properly based on kind of the new normal. But more important than anything is probably the buyer. If the buyer tells me they've turned stuff around at other businesses, they've exited other businesses, they've started and sold other businesses, and they're just, dripping with success, then sometimes you just want to, back that entrepreneur. Yeah.
Yeah, absolutely. Yeah. In this instance, it was a Google algorithm change that had caused the drop. And that's pretty me being in this industry of SEO and digital marketing, even if you're an expert, and I've had experts work on some pretty awesome businesses to get that sort of traffic back after an algorithm change. It's like very, very tough, even if you are the man at it,
Exactly. We're kind of in uncharted territory too with the LLMs because, SEO has been like the focus of the last 20 years for a lot of businesses. Right. And, I'm a lender. Like I'm not,
an SEO.
So I have to read a sim and think to myself, okay, it's saying that 50% of the business is coming from organic online traffic and, SEO. And I've got to think to myself, well, aren't people typing into ChatGPT now? And so you're not going to rank there because they're looking at Reddit or whatever. So I think that's what happened with the business that I was looking at. I mean, because it was like a solution to a product. Like there was a product that's like a solution to a problem.
They are. I just did a podcast episode with another person that's been in the space, Dom Wells. For everybody listening, check it out. It's on GEO, so Generative Experience Optimization for like AI, and how people are searching differently. And Google has changed, even in this last month, in how they, show up responses and how well you can prompt it with questions compared to like the basic sort of level of prompting questions we were accustomed to. So there is definitely a change of guard, put it that way, that the way we search on the internet is changing, and AI in terms of LLMs can pick up content so much faster than what a slower moving algorithm from a search engine can, until that search engine is adapted and fixed and changed. But yeah, we don't need to get into SEO here too much. What are some of the other ways that lenders will evaluate an online business, to see if it's like bankable for an SBA loan?
So, I think where the suppliers are located is a big question we're asking. I mean, I've been looking at a couple of deals this past year where the suppliers were US based. That's kind of rare in most cases.
Very attractive at this time.
Yeah, and that's probably why the only ones I'm seeing are those, because like the other ones probably have really bad financials because of the tariffs, and they don't even bother asking, or they're just everyone's on standstill. I think there was a lot of that for the first part of this year. Another big thing we look for is, and this is a tough one too. It is tough to find this for e-commerce, but is this a discretionary purchase, or is this something you need? A lot of this stuff is discretionary, which is another challenge for e-commerce. When I finance an HVAC business in Florida, I know that HVAC business is always going to have work here in Florida. But if you do see a business with, where it's a product that people need, I mean, that's definitely a plus. I just don't see too many of them in e-commerce. The subscription models are cool too. I mean, having more predictable revenue is always nice. But when it comes to lending, I mean, we keep it pretty simple. It's 5 C's of credit, and it really comes down to cash flow first and foremost. I mean, that's the crux of this. And it's, again, on tax returns, making sure that the numbers haven't nosedived in the current year from the tax return. If they have, like, you've really got to get creative and roll up your sleeves. But that's also, I get into some of those deals, but that could be a deal killer for a lot of lenders, because the thing is, these SBA loans are not cookie cutter at all. That's actually the biggest misconception, is like, go get an SBA loan almost like it's a home mortgage and it's like the same everywhere. It could not be more different. I mean, the SBA program is really just an insurance product that banks get to go design their own small business lending programs with.
Yeah,
and they could do it
a really good way to put it. I like that.
Yeah, and so if you ask 10 SBA lenders, a question, you might get 10 different answers, 10 different processes, 10 different credit appetites. But for me, it's cash flow first and foremost. Collateral is something we look at, but it's not needed. If it's not there, we're still good with that. That's just us personally. And then the buyer's experience. The buyer, are they putting their own skin in the game? What does their liquidity look like? Do they have okay personal credit? And most importantly, again, the experience. Do you have transferable, ideally direct, particularly in the e-commerce, in industry experience, because it is a little tricky. A lot of the people will have either direct, or they'll have some sort of inventory management type of experience, or they'll have some sort of sales and marketing, online marketing experience. But you got to give me something, because that's really important to us. Everything else is kind of secondary. A lot of different qualitative stuff we'll look into, just try to understand the deal. But ultimately, we're making the decision based on all of these factors, questions we're asking, some financial ratios, and we're really just making the credit decision sitting there, depending on the size of the loan, how many people it takes to approve it. It could be 1, 2, or a committee. But we just talk about it and say, hey, is this something we want to do? And that's how we make the decision.
Yeah, I love that. And would you consider, like, for somebody that is a buyer, like a lender, would they consider who's on their team and who's advising them and their experience and things like that? Or is it just
not? I mean, not as much as you'd like. I mean, we kind of make fun of it a little bit. I mean, look, it's good to have advisors in your corner, of course. That's smart. But I mean, does it actually move the needle when making a credit decision, assuming they're not personal guarantors on the loan?
Yeah.
Not a ton. I'm just being
Not a
honest,
ton, yeah.
not a ton.
Yeah. And I'd like to open up about like deal structure. You mentioned, obviously SBA is just an insurance policy, an insurance product for lenders. And there's so many different ways you can structure a deal, with different lenders, how they would like to lend with this SBA insurance product. But do you see a typical deal structure amongst either e-commerce brands or blogs, or even software businesses is like quite typical in terms of like cash down and then SBA finance or seller notes or
Yeah. So I'll start with SaaS. Those are, I see those, rarely, honestly. They tend to trade a little higher. So if I do see one, usually it's like, maybe it's a 5x multiple. I've seen up to like 7x, but none of that stuff cash flows with 10% down. So those automatically you're needing 15 to 25%, equity. The structure that I grew up on, which should fit most e-commerce businesses that are trading within a reasonable multiple, 4-ish, give or take, maybe 0.5, is 10% cash, 10% seller note, 80% SBA loan. That's sort of a standard market structure because, of course, the SBA wants to see 10% down. Most buyers want 10% seller note just to keep the seller's feet to the fire, keep them honest, and keep them engaged post-closing. And, that leaves 80% financing left for the SBA.
Yeah, cool. I love that. And that's just a very general terms. Like, I just want people to understand that then listening is like, all right, cool. I just need to put 10% down and the seller's always going to, put 10% in and the bank's always going to give me 80%. It's like, hang on, like it's per deal, it's per acquire, and there's so many.
Oh, absolutely.
So many things. So don't guys, just because we are saying this is in general doesn't mean that's applicable to everything. So
everything is made to order over here.
Yeah, absolutely. Based on your financial situation, mixed in with the financial situation of the business as well. Then you've got the lender, their terms too. So you've got multiple things that need to align for it to work in a way that everybody's happy. And it might not be that 10, 10, 80 is the sweet spot for everybody.
Well said.
Cool. What other mistakes do you see first-time buyers make with their SBA loan applications that that can facilitate a rejection?
Rejection. I don't think it's necessarily a mistake that can lead to a rejection, because if you come to us and I say I can't get it done, I might say, hey,
I'm gonna do it. Yeah.
Here's how we can get it done.
Mm-hmm.
The mistakes are really in closing. This is the thing a lot of folks don't understand is like when you get approved for an SBA loan, which, you might be from the time you call me to the time you have a commitment letter in your hand, it's 30 days is the fastest really that usually happens, because it's a week of getting to know each other, a week of packaging up the deal, 2 weeks of underwriting, and then boom, commitment letter. That's if everything goes like pop, 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 pop. Then you think, all right, let's close. No, actually, that's like the halfway point. The closing part is where the rubber meets the road. And with SBA, closing's the biggest part, because all these documents you got to collect, a lot of things happening in the background. I will say e-commerce specifically, easiest closings to do, because usually there's no lease, there's no landlord consent form, which is another thing you have to get. If there's a physical warehouse, you do have to get those things, but you don't have to get it if there's like a 3PL situation and the inventory is being stored there. So, and then a lot of times there might not be any real estate collateral because they, rent and there's no property. So there's no assets to like it just gets really easy, but that's kind of not the norm in SBA. Usually there's a lot of paperwork to collect. Insurances are a big one, purchase agreements and all the different parts of it, the transaction documents, equity injection verification. There's like a lot of stuff that SBA lenders have to get perfect to make sure their insurance program is intact, their SBA guarantee. So it's like all I's dotted, all T's crossed, all that. So you're going back and forth for a solid month to 45 days just in the closing. I just closed one a couple weeks ago. It took 34 days and everything went perfectly. And they were like, "Can we close in 2 weeks?" And I said, "We can." Right? Because we can like once you give me the stuff, we're going to close the next week. But I just know there's going to be more to this. You also have to get the SBA approval number. There's just a lot that goes into it. So we ended up closing in 34 days, which is still great for an SBA loan.
So fast, yeah.
But stuff always comes up every single time. And answer your question, number one mistake is not having competent counsel on your side. You need an attorney who understands M&A, and if they know SBA, that's a bonus. That's even better. There's a lot of good ones out there. If you don't have that, there's just no. I've never seen the process go not great, not even good, without that piece.
Attorney, yeah. This is why I share. Whenever I have a client that I work with specific M&A attorneys that I know have done this multiple times, and they're not the bottleneck in closing or any part of the deal, because that's what kills a deal the most is. And then you've got my job as an advisor to make sure the lawyer's onto it. We're getting the documents from the seller to the banks and the lawyer. And yeah, I'm glad that you did mention that e-com and online businesses are typically faster and easier than traditional businesses, because a lot of people listening to this is like, it's SBA is such a drag. It's like, hang on, you don't realize how good we've got it with the online space. But still, like you said, there's always things that are coming up, This last deal was just the tax returns that were like not on e-file in the IRS system. And then we had to like try and be in touch with the IRS,
right?
Update things, and you're just waiting on the IRS, and it's like, God, like
that's a big one.
What else can you do?
We're seeing a lot of that.
Yeah, lately, right? In the last sort of year, it's so frustrating.
There's a lot of issues going on in the government right now. I mean, we're actually, oh wow, we're recording this. The government is like about to shut down. Actually, here at the time we're recording this, I think at midnight. It shuts down. So, I mean, that's just you can't get SBA approvals when the government's shut down. So that's another wrench in here. But yeah, I mean, it's actually, they're really trying to modernize and streamline stuff at SBA. So they've got actually some pretty good people there, and they're working on it. And I was at a conference recently, and I think a lot of people are going to be happy about this, but they teased out basically IRS and SBA working together. You would think it would be so easy and so obvious, because we get hung up with some of these IRS issues all the time. And it's like, hey, you got to call them, and no one's there to answer. And, it could delay you for weeks and weeks, sometimes even months. I mean, it's rare. It's rare, it's less than a 10% chance, maybe less than a 5% chance that it happens to you. But when it happens to you, it's really bad.
It's really bad. Like, then you've got like, okay, this thing doesn't match. We need the accountants to get it to match. And then you're waiting on an accountant, and then you're waiting on IRS, and you're just waiting on multiple steps to, yeah.
Well, the people will file and then file an amended, but then they don't update the amended. So you get the amended, and then you get the verification, and it's the old one, and they just don't update the amended, and so they don't match. Yeah.
And it's pretty much it's regular. So, all right. Well, one more sort of like in SBA before I sort of want to sort of switch gears and challenge SBA a little bit, but what sort of role does seller financing play in SBA? Like is there, SBA is not going to approve massive seller financing, right? It can maybe, but where are the downfalls, and what does a beginner need to know when they're negotiating a deal with seller financing?
Yeah,
at SBA?
I always get so confused on when people ask me, is it okay that I have this massive seller note? I'm like, yeah, of course it's okay. It's a huge strength.
Proof that the business is good, right?
It's the seller believes in you, and
a seller's not going to have a massive note unless they believe the business is amazing and you're a good acquirer.
It's the number one lever that we all have to play with to make a deal work. I mean, I'll get deals, customer concentration, some sort of risk, slap a bigger seller note on it, and let's call it a day. I mean, we can work this out here with if the seller wants to play ball. But I would think I would think of the seller note in two different types of seller note in SBA world. Because sometimes people want to use the seller note for equity injection. Okay. Yeah. The SBA does allow that. That's really the only written rules that the SBA has on seller notes is when it's going to be used towards your 10% down. So essentially, if you want to put in 5% down, you can, but the seller's got to hold 5% into a seller note, and they cannot have any payments until the SBA loan's paid in full, which these are 10-year SBA loans. So essentially, it's like the seller deferring 5% of their sale price for 10 years or if you pay the loan off sooner. That's only if you want to put in less than 10% down. So the SBA will allow you to do as little as 5% down, with the other 5 coming from that standby seller note. That's one. On the other side, you have just regular seller financing. I'm a buyer and I want the seller to have a seller note. I want for a variety of reasons. That's fine. There's really no written rules on it. I mean, you can do, hey, payments start immediately. You can put standby 1 year. You can put standby 2 years. You can do forgiveness clauses if revenue drops. You can do a balloon after year 5. The only thing I would say is going to be tough is if you do a really short amortization of a payback, like, hey, 24 months, let's say a seller note. Because then the payment on a 24-month seller note is going to be so big relative to the size of the loan that it's going to throw off the debt service coverage calculations, which is our main thing we're really underwriting. So I would just be careful about that. But yeah, no, seller notes are great. Yeah.
Awesome. I love that. Outside of SBA financing, I know that the Art of SBA Lending, are there options, or do you provide options for people outside of SBA financing for acquisitions?
No. Next question. No, I don't. I love SBA. I'm passionate about it. I call myself SBA Ray. It's my only skill in life. That's all I got. So I don't know.
Come on, mate. You're a dad now. Like, as if you're.
There are maybe some. Honestly, there's really not a lot. Like, I don't know any national players. There might be some some little banks here and there that are local or regional that will take on a deal. Usually it's because it has a lot of hard assets on it. But yeah, I mean, until you get to I think they're saying 3 million in EBITDA, that's really where that kind of middle market banking lending kind of sector opens up. And those deals are much bigger than what I work on.
Yeah. Different terms, different types of businesses. Yeah. Love it, Ray. SBA Ray, thanks for coming on. People are going to be fascinated to learn more. So, guys, check out the Art of SBA Lending, the podcast. I'll link to that. Also link to your site. But if people want to get in touch and are like, cool, I'm looking at acquiring an online business, where should we send them?
Easiest thing to do is just SBARay.com, put in an inquiry. I look at them, all day long. So I'll get back to you right away.
Love it. Thanks so much. Really appreciate you coming on, and everybody who's listening, thank you for listening. And yeah, check out Ray's stuff, guys, SBARay.com.
Hey man, thank you for having me. This was a blast.
Yeah, absolutely. I enjoyed it. Maybe we check in a year or two and refresh everybody on SBA with the terms and the changes and
Let's
whatnot.
do it.
Yeah. All right. Cheers, guys. Speak to you soon.